Greetings and welcome to RiskOut monthly webinar. RiskOut is committing to providing valuable and thought-provoking content to bankers interested in starting and growing new business lines in their financial institutions. We provide a mix of personal and professional development to give you the tools you need to be successful. My name is Yuri, and I am delighted to be your host and serve as your moderator of today's webinar. I'm thrilled to welcome Kristen Parker, Director of Compliance at RiskOut, and Ryan McKerney, Senior Compliance Manager. Their combined expertise in this area of emerging markets should make for a worthwhile webinar. Today, Kristen and Ryan will share their insights about exams, audits, and board reports for high-risk business programs. We're certain that this information will help you with your current and future high-risk banking activities. Following this webinar, all registrants will receive a link to the recording via email. Our presenters will leave some time toward the end of the hour for our registrants to pose questions. And if you have questions you'd like to ask, please put them in the chat box and in the lower right corner of the screen. And at this point, I think that takes care of our housekeeping items. So I'll now turn it over to Kristen and Ryan. But before you guys proceed, could you please introduce yourself so our audience know about your experience and expertise?
Sure, thanks, Yuri. We appreciate you giving us a nice introduction like that. My name is Kristen Parker. I'm the Director of Compliance at RiskScout. I have been in banking for about 20 years with a focus on BSA AML compliance. The last 10. My niche in this world is really higher risk banking. I've launched programs myself as a BSA officer, so I know all the pain points of running one of these programs and how it feels and what keeps you up at night. And I now get to work with institutions all over the United States who are also feeling those pain points, and we get to solve those for them through these best practices we're going through today. So with that said, I'd like to introduce Ryan, who is our Senior Compliance Manager at RiskOut, and one of my favorites here at RiskOut that we get to work together a lot in the compliance land. Ryan?
So as Kristen said, my name is Ryan McInerney. I'm a former OCC regulator, having worked out of the Boston field office. I am since reformed, so if anyone on here is mad about that, please don't hold it against me. I worked mostly in mid-sized community bank supervision as well as large bank supervision, and was fortunate to take part in the compliance committee and commercial credit committees in the Northeast District and work on various agency initiatives. So I've been fortunate to have a broad scope of experience in the agency.
Good deal. Well, Ryan, I think let's start with the agenda. Today, we're going to be walking through defining exam management and what it means for a high-risk banking program. We're going to explore what a successful exam prep entails. We're going to look at critical considerations for your examiner and what they may be asking you for or asking you about. And then we're going to review options that will streamline your exam prep.
All right. So what happens during your exam? Well, from the examiner perspective, we are looking to assess the safety and the soundness of your institution. When we come into any financial institution, we're evaluating policies, procedures, practices against the rules and regulations that we know and love, any industry standard, and we'll even evaluate those things against each other. And what I mean by that is if we're looking at a procedure, we might make sure that the practices that you actually employ align with that procedure. Now, the typical evaluation methods that examiners will take to achieve this include transaction testing, which really overlaps with customer sampling. So if we had customer sampling, that would be I come in, choose 10, 12, 15, however many individuals there might be, and get the entire packet on that group, that person. When I'm starting to look at that, I might pull different transaction records from your transaction records, make sure that what you've identified there aligns with what should have been investigated, if it aligns with the customer profile, that sort of thing. We also leverage internal audit. So if you're coming into a financial institution and you haven't had a very long experience with that financial institution, it's very helpful to understand where there might be weaknesses, where there might be strengths by starting to review internal audits, previous exams, basically any reporting that's some sort of third-party assessment of the financial institution.
Ryan, I got a question for you from your examiner perspective. How do you guys go about choosing who you're sampling in an audit? And is there a certain like ratio number that you're going for in comparison to the customer size or the asset size of the bank? Or is that super secret, top secret stuff?
So it's not too secret. It's funny, the sample size will vary based on the type of examination. So for example, when you're looking at the asset quality review at a financial institution, typically they'll try and shoot for 10% or over for the total assets of the institution. When you're looking at, say, Bank Secrecy Act or compliance side of things, a lot of times that'll be informed by what's called the money laundering report, MLR, and that'll be published by FinCEN to the agency. And so we'll take a look through that, see if there are any people that we should be looking at there. And that level of examination is typically 10, 15 customers, but that will scale up based on the size of the institution. And I will say, if the initial review isn't the most positive and they're identifying a lot of issues, that can be grounds for them to expand the sample. And that will frequently happen with, say, like fair lending reviews or any compliance review like that.
So is it important for you, if you know that they have a higher risk banking program, that they have, when they're providing lists to you, that they provide a list that is distinctly naming out who they have deemed as higher risk, so that you have the ability to pull and ask for exact sampling from that specific list? Or is it more of like a sample off of all customers, or can it vary?
It can definitely vary. I mean, we would prefer to see something like that if I can see how you've stratified risk across the customer base. Saying, okay, well, these individuals are rated, say, 3, which is your high risk category. These individuals are rated 2.5, which is close to high risk, but not there. It is definitely helpful as we're starting to pull our sample instead of just trying to guess what's going to be considered high risk or not. A lot of times what'll be provided is a list of different customer types. So we know that, say, a money service business might be considered high risk, and so that will be our proxy for identifying a high risk customer. And same with different industries that have a similar reputation.
Sure, that makes sense. That makes sense. And I think one thing that we want to drive home here is that when your regulator is coming in, they're charged with ensuring that you are running a reasonable program. And that means they're ensuring that your policies and procedures actually match what your actions are there, and that all of those align to protect your institution and protect the financial integrity of the United States, right?
You bet.
Perfect. So as a former BSA officer myself, exam prep and exam management can only come with time and understanding of how the process works, right? So I like to say a few trips around the sun as a BSA professional will teach you that the initial scramble, let's just say you have an exam in March and you do all of your exam prep in February, you're really not running your program efficiently to have successful exam prep. It really should be a year-round planning so that you are constantly touching maybe your risk assessment, maybe your policies and procedures to ensure that, and doing testing and sampling against your policies and procedures so you can identify gaps throughout the year, potential gaps or potential problems that you can shore up prior to, then you running that fire drill to get it done a month before the exam did. I actually inherited a program that did the exam prep scramble that was completely miserable because we always had our exam in either late January, early February, which meant December was the exam prep scramble. Well, that's the holidays. Nobody wants to sit there and be pulling docs and be thinking about all that when you're just trying to enjoy time with your family and friends. So I went through 1 year like that, and I said, I will never live like this again. So I set out a schedule so that once a week we were looking at certain items that would be involved in the exam so that we could, not only for our own sake feel more comfortable, but we could also better inform our internal audit and our examiners and our key management, key personnel of, potential gaps that we could shore up beforehand. And what's really important here too is understanding that it's okay to set the tone and pace of the exam with your regulators. And how that's done is really sitting down and you don't want to be necessarily a dictator to them, right? But you want to have a reasonable conversation with them that states, these are the times I'm available for you to come and speak to me. And these are the turnaround time I'll get you any additional documentation that you may need and you request on site. Because the reality of it is that your day-to-day job doesn't stop when your examiners are in. So instead of, going through that awkward time when, like the regulators are kind of hovering around your office, looking in your window and making you feel really uncomfortable, or maybe they think you're available and you're actually on a call or prepping for a call or writing a suspicious activity report. Really, the best way to avoid that, kind of set like a calm tone and pace for the whole thing, is to have that realistic conversation with your regulator. And Ryan, how does that make you feel about when clients would do that? Would you rather them do that, or would you rather just kind of play it by ear with them throughout the time?
I think there's benefits to both, but having that kind of established cadence gives time for the exam team to put together their questions and really make more efficient use of your time. I mean, I may or may not have been guilty of the examiner hover that Kristen is describing. I don't think I was, but it's easier for me to just pop in and get one question answered. I mean, I would do that if I was an examiner. So if I can kind of consolidate all of that, wait till maybe the 4 o'clock window when we've kind of discussed, hey, this is when we'll answer our questions each day, or forward those along maybe into, I've seen some institutions create like an examiner inbox. So all the questions will go into that. Then the appropriate party will respond to that from the financial institution. So we don't make any judgment based on whether it's being managed at like the times that we're having meetings or how we're providing questions, that sort of thing. And if it's more efficient for you, I'd say that's a strong practice, just to maintain your operations while you're going through an exam, which is what I would imagine to be a pretty high burden.
Certainly. I mean, it's not that we don't like you guys, it's just that we have a normal day-to-day job that needs to be done too. And that's where I think it's better to have that conversation up front and say, hey, it's really going to change and depend on your institution size, your staffing availability. If you have one person that can sit there and really they get taken off of all the day-to-day stuff and that's their only sole job is to manage that exam while you're there, then by all means, let that be their job. And the quicker you can probably get done and wrap things up. But the reality of it is at least for community banks, you're probably not in a place staffing wise to do that. And plus, we also know that staffing is just so difficult to come by nowadays.
Mm-hmm. And I will say, just there are some people that didn't like us, so not everyone does not like us.
Well, to each their own, right?
Yep.
So let's talk a minute about what this means for a higher risk banking program. I'm gonna let Ryan take the examiner engagement piece, because I think this is really important. I learned a lot when he came over here to RiskOut about, kind of managing that examiner engagement throughout the year and what that looks like from at least the OCC perspective. And I imagine that practice is probably, what he'll describe to you is probably relevant to the other agencies as well. But Ryan.
Yeah, so at the OCC, what we would do is what we call periodic monitoring. And so that involved a quarterly meeting with stakeholders at the financial institution that you supervise. So I would have had a couple portfolio banks, and I would keep in contact with them and just see what was going on throughout the year. I also made myself available to those institutions to reach out and say, You know, if you're entering a new product line, a new geography, you have questions about anything, just shoot me an email, give me a call, and we'll kind of talk through it, and I'll try and provide what I can to help. We're fortunate in the examiner space to go into a lot of different financial institutions, and so we see a lot of best practices. We see what's worked, what hasn't worked, and leveraging that knowledge from your examiner can be really helpful when you're starting to design a program, when you're thinking about staffing up, and basically any of those major changes that are going to be occurring at your financial institution. Additionally, what's helpful with that is when you get to an examination, the examiner who's been speaking with you throughout the year has an understanding of what's going on and can provide context for that to different examiners that might be coming in. So if the exam is being staffed by some local individuals, but others from across the country, they may or may not have the experience that that local office has. And so being able to kind of quell any kind of overreactions to some of the things they might be seeing with context or with any additional information to help them make an assessment of the area they're looking at is going to be helpful for you. It's going to just kind of reduce a lot of the friction there that might occur.
I think I'll add there where while I love the idea of that happening, where you guys have quarterly check-ins, the reality of it is that those don't trickle down to where, not all the time do they trickle down to the people who are running the day-to-day operations, to let them know and be able to kind of pick their brains about best practices of what they're seeing on a day-to-day basis. Because if this was happening at institutions I was working at as a BSA officer, I didn't know. Now, I had regular conversations with my examiners because I valued their opinion on best practices. If I had questions, I would run by them, and I felt that worked better for us because they knew what was going on at our institution. They weren't caught off guard by anything. So if you're not getting that chance to be involved in those quarterly meetings, then maybe set some expectations with the examiners that you can have your own meetings on some type of set reoccurring cadence, or that you can send them some communication that they can give you some feedback on, in between your examination time. The biggest thing is to take away from this is don't wait until your examiners come in to ask questions. That's why they're there. They want to be there and be supportive. It may not feel that way sometimes. I guess it depends on the regulator too that you're dealing with. But I always dealt with pretty reasonable regulators that just, especially when you're dealing with high risk stuff. I launched one of the first hemp programs in the United States, probably about 4 months after the Farm Bill passed in December 2018. My examiners knew as much as I did, which was nothing. There was no guidance from FinCEN. There was no anything about how to bank these people. So I just kind of took best practices or, read through different laws in the states that we were banking and created a program that I thought would mitigate risk the best. And I would run it by them and they would give me suggestions and so on and so forth. But the reality of it is sometimes they don't know either. So as long as they know that you're trying to do the right thing, that shows that you're trying to run a reasonably designed program to protect your institution. Anything else there, Ryan?
No, I think that's spot on.
Perfect. And then just to finish this slide out, one of the biggest pieces that they're looking for, and I mentioned this on a couple slides before, is that your actual policies and procedures match your day-to-day practices. It's really important that you don't over-design your policies to pin you in a corner, that you don't have any wiggle room in there, because not everything's going to fit in a perfect little box every time. So you need to make sure that your practices match up to your policies and that your policies are reasonably designed to take into account that not everything is black and white all the time. So here are some best practices. Again, we get to work with banks all over the US. So we've seen and been able to walk through and talk through and look at some of these best practices in action and implement some of these best practices. We've had a lot of our institutions who have implemented these best practices and gotten really good examiner feedback, because we know that with every high risk banking program, whether it's hemp, whether it's ATMs, money service businesses, so on and so forth, it's going to look a little bit different about what the due diligence that you are receiving back. But general best practices include, if your business requires additional licensing, not just talking about, their local business license to operate, that's, you don't need to police the industry to that level necessarily, but you need to make sure if they are an MSB that they're actively registered with FinCEN. If they're a hemp business that requires licensing, that they are actively licensed. And that's just to ensure that they are operating a business that's within the legal boundaries. You need to also ensure that you have an up-to-date understanding of the business operations. That's really important when you're involved in not just new emerging markets like hemp and cannabis. It applies to existing higher risk markets that have been around for decades, like ATMs. And I say that because, with the ATM industry, for example, even though it's been around for decades, things changed there, and there's software you can now install into your ATMs, existing ATM unit, not have to really make hardly any changes, that allows customers that are using the ATM to purchase digital currency. That's a different risk. That makes them a money service business at that point. They need to check those boxes as a money service business, and you need to ensure that they know that. So businesses, the understanding of a business not only needs to be established at onboarding, but on an ongoing cadence too. Because especially in the hemp and THC cannabis industries, what we run up against is they're always morphing and changing, right? Somebody may just be a grower now and 6 months later be a grower processor and a retailer, what we call a vertical. It's happening all the time because people are absorbing new businesses, people are coming up with new businesses, and the importance of understanding the business means that you'll be able to actively understand that the activity occurring in the account is commensurate with the stated nature of the business as it stands today, not just at onboarding. And then ensuring you have accurate information on key individuals, including beneficial owners. This is really important from the factor of being able to run any adverse media against a business, to have a true understanding of who's involved in the industry. And there's many factors for this, but one of the biggest ones, if you're dealing with hemp, let's just say you have a hemp program and you're not in the state yet where you're ready to bank THC cannabis, but maybe one of your beneficial owners has a stake in a cannabis company somewhere. You want to ensure that those funds from that cannabis company don't commingle into your institution. And so the only way to understand that is to understand who the key individuals are and to set expectations with that client, either through an attestation or a conversation or something that says they won't commingle those funds derived from cannabis into your institution because it's against your institution's risk appetite. You want to keep customer communication and touch points readily available. This is not only from your examiner standpoint, but also from your own protection against I guess more of a cover yourself when you have to have conversations that are hard, maybe with your executive management. And I'll give you an example there. I had a client one time that was a hemp client. He was, onboarded, was very responsive then. And then I had the conversation with him that, you're a customer of ours, which means you're going to have to adhere to certain expectations. And when we ask for documentation, you know, I expect that, and so on and so forth. He agreed. A couple months later, asked for his an updated license from him, and he ghosted me. And he ghosted me for 6 months, to the point where every time I tried to contact him, I never heard anything back until I sent him a closure letter for his account, and all of a sudden he wanted to talk to me. But he didn't want to talk to me, he wanted to talk to the CEO. And he said that we were closing his account because it was hemp-related business. And so obviously that set off a whole tizzy at the bank, but I had everything documented that I needed to show that he was being unresponsive. So it's not just from, you know, your examiner standpoint to show that, you know, you're really making reasonable effort to understand this business, but it's also so that you can have those tough conversations and say, I tried my best to get this person to cooperate, but they just won't. And then documenting your thought process in a full scope review. So you need to have targeted questions when you are doing a look back review on a business to understand that the activity is commensurate with the stated nature of the business. You really need a targeted questionnaire for your employees to go through that touches based on that industry type. So if it's a hemp-related business, it should be targeted towards the risks, the known or perceived risks involved in the hemp industry. Same goes with money service businesses, independent ATMs, cash-intensive businesses, so on and so forth. And then you need to retain any type of customer documentation that you received from them or that you've looked at or looked up. You need to retain that for review. Brian?
Yeah, I mean, that's a really comprehensive view of a lot of these best practices. And I think it really is important to maintain that understanding of how these businesses are operating. There is the ability for them to kind of change those operational plans. So keeping in touch at some sort of cadence that you've determined is appropriate for your institution is relatively important. And then documenting that is equally as important. For yourself, for your regulator, your auditor, maintaining that kind of trail is a good backup for you, especially if we're talking about people that are starting to change industries. If you reached out and said, hey, what's going on in your business? Has anything changed over the past 6 months? Are you planning on moving into any new fields, new products, new services, that sort of thing? And they say no, they just lied right to you. Well, I mean, at least you asked, you have that documentation that you asked, and that's going to be really beneficial for that kind of audit trail around the customer. I can talk a little bit about, if anyone remembers the Wells Fargo debacle and then the ensuing sales practices type focus for a lot of the regulatory agencies. There was a heavy review of what was the customer communication process, how was all of that documented, and that was a horizontal examination across the industry. And those practices were evaluated at almost all of the large banks, even some of the banks that were a little smaller than that. And I think a general finding there was if you had better documentation of your communication, the issues that were uncovered during that review were a little bit less because we knew exactly what had happened there. We saw, okay, well, you actually recorded your phone calls, which, I mean, not everyone needs to be recording all their phone calls. But all of that information, what happened, that entire customer journey, that entire customer engagement, that was documented, so we knew exactly what was going on. And that covers not only the financial institution, but I mean, I think it even helps with the customer from a security standpoint.
Certainly.
Okay, so exam prep it's going to look a little bit different for the different industries we're talking about. Kristen mentioned a little on the prior slide how when we're asking questions on that periodic basis to stay apprised of the customer's activities, that we're tailoring that to the industry that the customer is actually in. And that's going to be the same for the prep that we're looking at. For example, if we're looking at cannabis, which actually contains THC, we'll be looking at the sales information, licensing, operational plans, collecting all of those on that periodic basis, and then communicating that to the examiner, the auditor, and even internally, maybe to the board level from like a summary perspective, senior management from a summary perspective. So the gathering, what you're actually looking at in the THC cannabis space is specific to the THC and cannabis industry. The same thing is going to be true for hemp and CBD. We'll be looking at what are the practices that customer has for maintaining regulatory compliance. It's going to be a little bit different from THC cannabis because frankly, we're trying to prevent the hemp from becoming THC. And then when we move farther into money service businesses, there we might be looking at, well, what's the anti-money laundering audit? What's the training, the policy that entity has? Are they complying with the rules that we expect the money service business to comply with? And so all of this information is what we communicate to the examiner or the auditor, and even internally, is an understanding of these are the operations of that entity, and these are what are required of that entity. Do those two things line up? So it's a little bit of back and forth, making sure that your program understands those distinctions, not just, oh, all high risk is high risk. You really need to stratify the risk across those categories and make sure you're understanding for the specific risks relevant to that industry.
Yeah, and I think what's really important to take away from this one is that you can't blanket statement risk for these industries. There are different risks involved in the industry for cannabis altogether. You have your plant touching businesses that require certain licensing, and they kick in FinCEN requirements where you need to be filing reoccurring SARs. And then you have tier 2 and what people refer to as tier 2 and tier 3 clients who are not plant touching, but they directly support the business. Your tier 2 directly supports the industry by maybe supplying lighting to them, fertilizer to them, packaging, shipping, so on and so forth. That's different risks involved in there than they are plant touching. And then you have ancillary businesses or tier 3 who just happen to accidentally, I guess you'd say, serve these businesses. That may be your lighting company, an accounting firm, a law firm, so on and so forth, where that's not their primary purpose of their business, but they happen to serve maybe a handful of clients. So you don't want to ever go into with your policy and say, we don't bank any cannabis at all. No, that's not, you may be banking the lighting guy down the street or banking the lighting company that serves that. You just want to be careful in how you word your policies, and you want to be careful to say that all of a certain industry sector is too risky for you, because it's not okay to just blanket statement risk on these industries. You really should take the time to kind of extract out and understand what risks are so that you can really truly choose whether banking these industries or not is within your risk appetite. And regardless of whether it is in your risk appetite or it isn't, you need to address it in your policies and your procedures, because that's what the regulators are expecting. They want you to say in your policies, you just can't turn a blind eye anymore and pretend this stuff isn't in your backyard. And that's what they're coming up to, is saying, we talked to some banks and we're like, well, we can't bank hemp, it's not legal. It's been legal since December 2018. And you are the very people who get to determine who and who doesn't get to bank. So you need to really be paying attention to what's going on in your own backyard, because the very people who are saying that have 3,000 or 4,000 hemp licenses in their own state that they're missing an opportunity to bank. And as a community bank, they're not fulfilling their purpose of serving their community. So understand who's in your community and understand that you can't just blanket statement risk on this, and that there may be opportunities for you that actually fit your risk appetite, even though on the surface you may not think so. Let's talk about best practices for documenting full scope reviews. So we know that essentially these are very high level basic things that you should be looking at. Your full scope review documentation is going to be also based on your policies and procedures and what you say you're looking at. These are the very basics of some best practices that our institutions are looking at. Transaction reviews need to be documented. you should have a look back review time frame. You should have in your policy set to where you review higher risk business on a reoccurring set cadence. So whether that be annually or semi-annually, whatever it is, you should have that stated in your policy. And then you should be documenting that that review happened and what all the components you looked at to determine whether that activity that occurred in the account was again commensurate with the stated nature of the business, so you could determine whether or not the activity is suspicious or not suspicious. So that really falls in to SAR filings. You really need to be documenting your SAR filings and no SAR filing rationales so that examiners can make sure you're adhering to FinCEN guidance. So your no SAR filings are the ones that you did a whole case review on and you decided, doesn't look suspicious enough, maybe, or maybe you got some information from the business that you thought there was an unusual wire, but it turns out they were just buying some equipment and they provided receipts and documentation for that equipment and justification. You know, that's okay. Sometimes that happens, and no, we don't have to file a SAR for the sake of filing SARs if activities over $5,000. Institutions do that all the time, and it's really a sore point for me because it's you know, clogging up the system for the sake of checking a box. Really be comprehensive in understanding what you truly believe is suspicious and not. And if you don't think something's suspicious, just have decent rationale and documented rationale as to why, because they will ask about that. And then adverse media reviews are really important for the fact that, you know, we may on the surface know somebody, feel like we know somebody, but and maybe we did Google them at onboarding. But one thing we've got to remember is that when we Google somebody for adverse media, it's based on our geolocation of Google, our Google settings. So we may have to go 8, 10, 12, 20 pages deep to find something if we're banking a larger footprint to find some news. Googling is really an ineffective way to do it. And so you really need the ability to have an adverse media tool that can not only review these people at onboarding, but on a reoccurring basis, so that you know when any type of adverse media comes up that may affect your institution from multiple risk standpoints, but especially a reputational risk. I was burnt once by an MSB that, you know, checked all the boxes on the surface. I did MSB reviews every 6 months at that point at my institution, and I did my adverse media review at that, you know, previous 6 months, everything checked boxes. She had everything lined up as she should for an MSB. And then 4 months after that review, I get a call from a branch that says, I don't know if you know this or not, but so-and-so has been arrested as, you know, money laundering for one of the world's largest drug cartels. It's in the paper this morning. So if she hadn't called me because I had no adverse media running, I would have gone another 2 months with this account open. Not that there was any more activity occurring in it because she was obviously detained at that point, but I don't want to have to explain to my regulators why I let this go for that much longer, this account stay open that much longer after she had been arrested. So it's important to think about investing into some tool that's going to help you monitor these guys. And then contract reviews are also important. So documenting contract reviews means maybe if you have a money service business, you're reviewing their contracts with MoneyGram, any of those money transmitter services. If you have a hemp business, maybe the license holder is different than the business that is banking at your institution. You want to ensure that that license holder and that business actually have an agreement on file that acknowledges that the license holder and the business are okay. the business is allowed to grow hemp on their property. I can't tell you how many times we've run into snafus with hot crops or people coming back and having a dispute later and saying, I didn't know this guy was growing hemp on my property, and it causes a whole slew of problems. We're not telling you got to police the industry, but these are really just best practices for protecting your institution. Ryan, anything to add there?
Yeah, I think one thing I'd add is just on the SAR filings, Kristen mentioned the importance of the documentation for not only filing SAR, but for not filing the SAR. And a lot of things that examiners, auditors are going to be looking at is the investigation process. And frankly, that should be one of the more important aspects to that in the institution as well. But it's how do you make a decision on, is something suspicious? Is it not suspicious? How did you look at it and evaluate it to make sure that you did that accurately and correctly? And you're doing that on a recurring basis, that it's not, that you're not making any mistakes in that area, or if there are mistakes, few and far between.
Yes, certainly.
So some critical considerations when we're talking about these programs, well, first and foremost, it's going to be the board of directors actually approving the program prior to you launching it. So if your bank has just started and went out and started lending to hemp individuals or THC customers, something like that, and there's not really a policy in place on it, the board of directors haven't approved that additional risk-taking activity, that's probably not the best practice for you. It's going to be important to identify these are the risks in the industry, this is the market analysis, this is why we want to enter this space, or maybe it's, we really want to serve our community in this area. We know some of our community members are in this industry, and we think it aligns with our mission statement. Whatever the rationale is, documenting that, thinking out what the risk could be, how to operationally achieve what you're trying to do, all of that, and having it approved by the board, senior management team, all the stakeholders in the institution are on the same page. So part of that is going to be completing and documenting a formal risk assessment. And that should be considering the details that are specific, not only to your high risk program, but also to your bank in general, or financial institution, I should say, bad habit of being a national bank regulator. So what we're talking about when we're talking about that actual risk assessment, it might be geographic risk, it might be risk specific to an industry. Kristen talked a bit earlier about stratifying even within an industry. When we talk about cannabis, for example, on the THC side, we have 3 different tiers of customers. The same thing is going to be true when we look at other high-risk industries. So say we look at crypto. From a money service business perspective, they could be administrator, they could be an exchanger, they could be a user. So there's different levels of risk within these different industries, and you might be stratifying part of that out, so picking and choosing what areas you might actually want to take risk on. And so doing the assessment to determine this is an area we're comfortable with, this is an area we're not comfortable with, and making sure you're selecting the right customers for a program that you're starting to build out. Lastly, is going to be important to have that policy approved. So that's going to be documenting that the board actually did approve this program. But once the board said, we want to do the program, the policy is really going to be, this is the types of risk, codifying the types of risks that we're willing to take and how we want to manage them. After we've actually built out the policy and moving over to the procedures side, these are kind of our levels. This is what we want to work to. Now we're going to have a bit more detail on the procedures on how we'll actually achieve that, how we make sure that if somebody leaves the institution or some process breaks, that there are backups to make sure that we're continuing to assess and monitor the risks that are associated with the industry.
So we touched in the very beginning about, the managing of the exam prep needs to be really year round. Don't be the people that are out there scrambling at the very last minute, because when you ensure that you are managing this year round, you don't run into a problem at the last minute that you can't fix. So when you are managing any higher risk banking program, it means that when they onboard, you need to set expectations with them that you're going to be communicating with them on some set reoccurring cadence, so that they know when you ask for documentation they are required to give it to you. By having that conversation, if you end up with somebody who's non-compliant, you have an exit strategy. You've tried, you've documented that you've tried, they didn't adhere, they are no longer a customer. If you have year-round communication with your customer, you ensure that you have the most up-to-date information from your customers year-round. So they know that when their business updates, they feel like they have an open line of communication with you. They can let you know that. They're not scared to tell you things. And that's really important. I have customers, or I had customers that would call me just to tell me they were making a deposit that was out of the norm. That was important to me, that I established those relationships. Actually, they still call me and I haven't worked there in years. Call somebody else. I don't work there anymore. But again, audit trails are very important. Document all the customer touch points, from the application to check-ins to your periodic reviews, all of that. And make sure that you are keeping all of the documentation, including licensing contracts and so on, and make sure that they are in a digestible manner that your examiner can review it easily. Anything else there, Ryan?
Could not have said it better myself. Nope, sounds good to me.
That's good. So we know that traditionally with exam prep that sometimes we run up against the fact that we have paper trails for stuff. Maybe we have documentation that's half paper, half digital, or that we have it all digital, but while we're trying to pull documentation for our sample documents, somebody has saved their recent review into the wrong folder under a wrong customer name. I used to run into that all the time, and it just made everything so slow and painful. So that's really where technology comes in and helps make exam prep much, much easier, much more efficient and effective.
Yeah, when we talk about kind of that scramble that is the exam prep process, I've gone to a lot of financial institutions where, you know, it's really well put together. It's easy for them to reference. I might even be viewing it from within some sort of digital viewing system, versus other institutions where it's clear things have been kind of printed out piecemeal, system by system, put into a little folder for me, and now I've got 4 boxes or folders to look at my customer sample. So it's going to be easier if all of that is really put into one place, stored in a central location, and you can just print that entire record for a customer versus having to find it in 10, 15 different systems, different files, whether that be physical or within your computer. It shouldn't be a part-time job to gather all that. So on the left, which I believe is left for all of you, that honestly reminds me of some of my exam work, because we would just get dozens of those boxes. And I doubt that was fun for the bank, or for the bank to actually put that together. It probably wasn't fun for them to have to move it into the basement or whatever hole we were placed in within the financial institution. But there's definitely more effective ways to store all this information, and it's work that you've already done for the most part. And so if you have already done that work, it shouldn't be taking another 40, 60 hours to just put it together for someone to look at it. Kind of building in a best practice throughout the year where you're documenting this in a way that's accessible and easy for you to provide to someone is going to make your life a lot easier.
And not to toot our own horn here, but we have built RiskOut as that audit and exam prep management system. You know, it does much more than that, but that was always on the front of mind because that was the thing that would keep me up at night. So when I had the opportunity to come over to RiskOut, it was very much on the forefront of my mind. How can we make it easier for managing these relationships in general, but then extracting this information in a manner that an examiner would appreciate? So we've come a long way and have actually had lots of our institutions go through exams using our system, and they love how easy everything is to understand. Anything else to add there, Ryan?
Nope, I would agree 100%. I think this has been a great system to be able to work on, and it is just so clear and kind of concise where everything can be stored, and just to reference, it's a nice change compared to some of the things I've seen.
Ryan, Kristen, thank you very much for sharing your insights. Extremely helpful, very valuable, and please never be afraid to highlight the benefits of the system that has been created, because it has been created exactly for the reason that we want to enable more businesses to bank locally and support local communities and local financial institutions, but also improve the time, effectiveness, and efficiency of the employees of those financial institutions. So I think you guys doing a great job bringing the perspective and helping to pave the road into the bright and successful future. So thank you for your insights. Thank you for highlighting the benefits of the system. And before we wrap up today's webinar, I actually have a couple of questions. And if you're okay with that, I wanna shoot the first one. You suggested that as a BSA officer, I should be setting the tone and pace of my exam with my regulator. So I'm curious, how do you go about doing this, and how an examiner would feel about me doing this?
So the way you go about this is, again, just setting the tone by having, when they first contact you and they first are in your building, or we've had to go virtual a lot because of COVID, to have that conversation with them and say, I have a full-time job here. I can carve out from 8 to 9 in the morning and 4 to 5 in the afternoon. And when you ask me for additional documentation, I'll have it to you within 24 hours. And it's not being, aggressive with it or demanding with it. It's just saying, look, we're both human here. We both have day-to-day jobs that we still need to do. I know your job right now is to examine me, but I still have a bank to run here in this perspective. And that's okay, right, Ryan?
Yeah, definitely. It's I mean, as long as everyone's kind of courteous to one another, considers, hey, these are the things that are important to me, and no one's rude and saying, oh, I'm just not going to talk to you for 9 to 5. Like, that's probably not the best way to go about it. But if you're just saying, hey, this is best for our operations, for our business practices, as we try and manage not only our day-to-day operations, but the heavy workload that you all are putting on us as an exam team.
All right, fantastic. Well, that's pretty straightforward. Thank you. It makes sense. The other question I have is that I inherited a BSA program that is all paper files, and going forward, our team obviously wants to start storing all paper trails digitally. In my case, should I be moving all the existing paper files to digital, or are examiners okay with having some things on paper and some things digitally?
Yeah, I mean, I think if some information's on paper, some things are digital, that's just kind of the nature of the beast. If you haven't put all of that information into the digital system, I don't think anyone's going to criticize you for that, depending on what that information might actually be. But if you look at, for example, a institution that's been through a merger or an acquisition or something like that, you might see information stored in separate digital systems. So it's not a new concept for examiners or financial institutions to have information stored in different places. And it's just a matter of providing that holistic picture of what's happening with a customer, knowing that, hey, maybe everything from prior to 2020 is in this paper file stored in X area of the bank. And then everything else has been documented in our digital system. So as long as the information is accessible and usable, I don't think the storage method is going to come under scrutiny.
All right, fantastic. Well, thank you for valuable insights. And at this point, I want to thank you guys, Kristen, Ryan, You did a phenomenal job. Lots of great information to think about and actually moving forward, start implementing inside our financial institutions. And to all the registrants, as a reminder, you will be receiving a link of today's recordings via email, so be on the lookout. And as the host and the moderator of today's webinar, I want to thank everyone for joining us together, and I hope you'll join us on the future webinars. Thank you and have a wonderful day.